Hello, welcome to the European Open briefing for Monday, September the 11th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we saw quite a bit of volatility on Friday, as there was a bit of market panic over both the possibility of North Korea conducting more tests over the weekend, as well as about the possible impact of the Hurricane Irma hitting the US Gulf of Mexico. As those concerns start to subside, we are seeing quite a reversal of Friday's moves. The dollar has rebounded sharply, and safe havens have retreated significantly. The currencies which mostly benefited from the weaker dollar, such as the Aussie and the Kiwi, they're sharply down this morning, although the euro and the pound have managed to hold on to most of their gains. We are seeing oil prices edge up somewhat, not too much, but tending to pare back Friday's losses as the Hurricane Irma makes its way through Florida, and potentially the worst being over for the US as far as the impact on refineries is concerned. So let's have a closer look at the US dollar. We can see dollar yen in orange and the dollar index in purple. Dollar yen has made a significant rebound, rebounding from Friday's 10-month low 107.31, currently trading around 108.50. That's quite a big jump over the day. Dollar index, though, it's only marginally higher. It did drop to 32-month low of just above 91. It's currently trading around 91.50. We did also have a bit of a boost from President Trump saying that he wants Congress to speed up its efforts to reform the U.S. tax code. He said that given the damage done by the hurricanes, those tax cuts are needed even more now. But we are seeing GDP growth forecasts for the third quarter being revised down due to the possible economic damage from first Hurricane Harvey and now Hurricane Irma, and possibly more hurricanes reaching the US coast over the next few days. We are seeing heavy flooding in Florida with millions of homes and businesses being left without power, so that's bound to weigh on third quarter growth. Looking at safe haven gold, we can see it had jumped to a one-year high of $1,357.54 an ounce on Friday. It has dropped back quite a bit to around $1,335 at the moment. The big fear was that North Korea would use the country's Foundation Day celebrations to carry out another missile or nuclear test. They didn't do anything. What we saw was the North Korean leader choosing to honor the scientists that were behind the previous weekend's nuclear or hydrogen bomb test. So this has led to quite a bit of easing in the risk of sentiment in the markets, with risk appetite making a return. Although it's worth noting out that the UN Security Council will vote later today on whether to impose further sanctions on North Korea if they do go ahead and do that, which is unlikely given the opposition from China and Russia. But if they do prove to further measures, we could potentially see North Korea again starting to carry out more tests in protest. Further helping risk sentiment were Chinese producer and inflation prices out on Saturday. We saw Chinese producer prices hitting a 4-month high. That points to solid growth in the third quarter in China. But this has been pushing the yuan higher. We saw the yuan hitting a 21-month high of 6.4346 to the dollar on Friday. There were reports in Bloomberg that People's Bank of China has removed a reserve requirement for trading foreign currency forwards. This is to well, they had imposed that restriction following the yuan's sharp depreciation last year, but given that now it's reversed most of those losses, it could be a sign that Chinese authorities are becoming more concerned about the stronger yuan, and lifting of those restrictions should make it easier for financial institutions to purchase dollars, and therefore easing the upside pressure on the yuan. Let's have a quick look at European currencies now, because both the euro and the pound haven't fallen too much from Friday's highs, despite despite the dollar rebounding sharply. There were reports on Friday that ECB policymakers are in broad agreement about the bank's next move being to scale back its asset purchases, and that several options were discussed. So this is supporting the euro above the 1.20 level, having hit 2.5-year high of 1.2092 on Friday. The pound is trading near 5-week highs. It did reach 1.3224 against the dollar on Friday. Investors are being cautious ahead of Thursday's Bank of England policy meeting. The bank had been sounding a bit more hawkish in recent months, so therefore this could be perhaps investors waiting to see what the bank will say before starting to become more bearish again on sterling. Also to watch out for is the UK Parliament will be voting on the Brexit repeal bill later today. If the bill fails to pass, which is a possibility given there's quite a bit of opposition to that bill, we could see this could potentially jeopardize Prime Minister Theresa May's position as both as Prime Minister and leader of the Conservatives, and as warned by the Brexit Secretary David Davis, it could lead to more chaotic Brexit. But for now, the pound is not doing too badly in the currency markets. Looking at commodity-driven currencies, both the Aussie and the Kiwi are sharply down from Friday's highs. The Aussie actually hit a 2-year high of 0.8124. The Canadian dollar also hit a 2-year high. We saw stronger than expected jobs figures out of Canada for August on Friday. We saw the loonie hitting 1.2057 per US dollar. Oil prices, though, did fall sharply on Friday. That did kind of weigh a bit on the loonie. This was because traders feared that Hurricane Irma would cause further disruption to refinery output, leading to lower demand for crude oil. But prices have been boosted this morning by reports suggesting that Saudi Arabia's oil minister is discussing extending the current output deal beyond March 2018. So that has lifted prices a little bit this morning. WTI crude is currently trading at around $47-60 an ounce. It's going to be a fairly quiet day for the rest of the day, with only housing starts out of Canada. We did have Japanese machinery orders, which came in above expectations, but apart from that, there's not much else on the economic calendar for the day. That's it from me. Thank you very much for watching, and have a great day.